Let's talk today about unrelated business income tax. This is something that is only applicable to 501 nonprofit organizations. So that's going to be 501c, whatever, C3, C4, C6, and it applies differently depending on those. The focus of this video is unrelated business income tax as it relates to 501c3 tax-exempt organizations. Now, the important thing to cover with this is that unrelated business income tax it's kind of a giveaway in the name. It deals with when an organization has unrelated business income and the taxes that that organization has to pay on that income. Now, the important sort of framework here to think about is that nonprofit organizations are set out for a charitable purpose, right? There's a mission that that organization has set out to accomplish. Maybe, let's say, that's housing homeless people and getting them into shelters. And that's awesome. And that charitable purpose, the programming of that needs funding, right? You need funds probably to help subsidize the housing for those homeless neighbors of ours. But the difficult thing, and the thing that I talk about often with clients, is that if you sell products or you sell services as a nonprofit organization, and then you use those funds to then do that subsidize or, however help the people that need to be homed or sheltered, housed, that money that you got from the sale of products and services, as much as it goes to actually support the purpose of the organization, that's probably going to be unrelated business income that you have to pay taxes on. The reason for that, and the good example to provide, is that let's say you sell shirts and hats and shoes and all these different products to fund what the organization is doing. You have a good argument that that is in line with the charitable purpose to provide the programming that the organization provides. Right? Well, wrong. Unfortunately, unless the people that are making the products that are sold are also learning skills, and your charitable purpose is to teach craft skills or entrepreneurial skills or how to make these goods, unless your charitable purpose is that, then those people making those goods are outside of your charitable purpose. And in the event that you just bought goods on like Shopify or something and sold them, then that's totally unrelated to your charitable purpose, and all of that would then be taxed. So the way to avoid UBIT, unrelated business income tax, is to make sure that any products or services that are being sold as an organization are actually a part of and baked into the charitable purpose. So another great example, like I mentioned, if you're going to sell products or services to fund the operations of the organization, the best thing you can do there to avoid UBIT is to make sure that the folks that you are benefiting as an organization, let's say the organization is designed to teach craft and entrepreneurial skills to underserved communities. Well, if you then work in those communities and you teach them how to make the shoes, the hats, the shirts that you're selling, and then those products are sold to fund the organization and provide more of those programs to teach those folks how to make those goods, none of that's going to be subject to UBIT, because you're teaching those skills in the process of making the goods that you then sell to then completely keep funding the programming itself in that sort of cyclical way. None of that would be subject to UBIT because it is not an unrelated business income. It's all part of your charitable purpose to teach those people those skills, sell those products that they create to fund the programs so they can continue to do that. Now, an example that's similar, if you just, like I said, bought on Shopify, or you have a Shopify store and you just buy from a factory in China the tons of products that you make that they make that you're gonna sell as an organization, and then you use that funding to help provide the programs of your organization. Let's say in this example that the nonprofit is designed to help clean the waterways in San Diego. Well, selling all those products that say, hey, we need to clean San Diego, we need better water, unfortunately, you're going to most likely be subject to unrelated business income tax, specifically sales tax, on all of those products that you sell because they're just random products that you bought to sell to fund your water cleanup efforts. And so unfortunately, that's going to be taxed, which on the one hand, yes, that sucks. As a nonprofit, part of the reason is to not pay taxes, and that's more money that you need to pay those taxes. But hopefully, that's going to be an amount of money from those product sales that can help you then completely do all of your work and clean those waterways. And that's totally fine. Nonprofits can have UBIT, pay that unrelated business income tax, and that's fine. It's legally compliant. It's all good. It's just extra money that you have to pay to the government to sell those products, and hopefully the product sales, the overall amount, outweighs the amount that you pay in sales tax and for business income tax. Now, the important thing, however, to cover here is that unrelated business income tax is fine, like I just said, unless it outweighs your amount of public funding as a nonprofit organization, 501c3, that is primarily funded by the public. So if all those product sales then get to a level where they're much more or even any bit more than your public funding, all your donations and grants and things like that, that can actually jeopardize your tax exemption. If your unrelated business income rises to a level that is higher than your public funding for the organization, that is grounds to terminate and revoke tax exemption. So let's recap this. It's a lot to kind of cover. If your organization wants to sell products or services, and those products and services are not created or sold by the people that the organization is set out in its charitable purpose to benefit, then you're most likely going to be subject to unrelated business income tax, which is fine. The organization would just have to pay that tax, sales tax on products, for instance. But if the primary mechanism of that organization to fund its operations is the sale of those products or services, and they are unrelated business income, and it rises to a level higher than your donation amounts through grants or public funding, then you could actually be revoked of your tax exemption and no longer be a nonprofit organization, because all of this comes back to the fact that if nonprofits that don't pay taxes are allowed to sell goods and services till the end of time without paying tax, they have a pretty significant competitive advantage over for-profits that have to pay those taxes. So, unrelated business income tax, specifically applicable to nonprofit organizations, totally fine unless that's all of the funding of the nonprofit, which could cause a revocation of your tax exemption. Hope this was helpful. Hope you tune in again. Have a great day.